What's up? Great to see everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure has everything that it had yesterday, plus I've got some BABA and some Reddit that I bought into on the dip. Not huge positions, they're still small at this point. So that's the update on the position disclosure. We're waiting on NVDA. We got snow out. Snow's trading up off the reaction high, but still up 8% or so. Let's scroll up and look at these numbers again. Q1 product revenue is a nice beat. Q1 adjusted diluted EPS is a little bit of a miss. I don't think that matters too much. They see their second quarter product revenue at 805 to 810 million. That beats estimates at 787. So that's probably the most important number right there, is the revenue guidance from Snowflake. They see their fiscal year revenue guidance at 3.3 billion. So that's a beat. Their fiscal year adjusted operating margin's down though, so it's not good. I really like when these companies beat on the margin numbers. You see their fiscal year adjusted operating margin at 3%, I guess, versus 6%. So it's not ideal. But market, the stock's trading up on it. The revenue guidance looks good, so not bad there at all. With snow, we got ELF out. I'm not going to run through the numbers on ELF, but stock's trading down 12.5%. And we're waiting on NVIDIA. NVIDIA should be reporting in about 6 or 7 minutes. So I will, the NVIDIA numbers are just insane. I don't remember, I looked at them a little bit last night. I don't remember exactly, but what stood out to me was like the growth of revenue, like year over year, is insane. Some of those growth numbers are like 200%, 400% for a company of this size. It's like absolutely and utterly mind blowing. But the expectations on this NVIDIA today are no joke. So, it's the numbers will be insane no matter what. But they have to be good versus expectations. That's all the market's really going to care about. And NVIDIA is pretty much trading at all-time highs going into this report. So let's see what happens. I'm inclined to think that like an inline number without any surprises, you have risk to the downside on that. There's just so much hype around this stock. But you can't count them out to crush even really high numbers, just because they have a reputation now for doing it. They've been doing it. It's happened on multiple quarters now where they've just absolutely crushed the numbers, and those numbers were pretty lofty even to begin with. But I do kind of think that on an inline number or a miss anywhere, just given the amount of move that the stock has already had, the fact that trading at highs into it, that the risk is to the downside. But that's just total speculation. So we will see what happens in 5 minutes. And it has the ability to really impact this market. So as of the close here, the SPYs closed down about 0.3%. The Qs closed pretty much exactly flat. And the IWM was very relatively weak all day today and finished down 0.8%. We've been spending the last couple of days talking about the build out of this bull flag here for the SPYs and the Qs and to some degree the Russell. And, technically that ADMA caught up to the base this morning, and that could have been enough to really make this market move higher. But we cautioned that given the Fed minutes and given NVIDIA, there's a good chance, and there was still a little bit of extension with the market. I think we had $3 of extension in the SPYs from the ADMA, that there was a good chance that we'd get another kind of rest day. And that's kind of what we got. A little more volume, a little more volatility today than yesterday because of the Fed minutes. which really moved this market, especially the Russell, to the downside, despite TLT not really giving much of a move, which I thought was kind of interesting. It almost seemed like they were looking just for a reason to take some risk off, and it had less to do with the minutes per the TLT than the fact that it was just kind of an excuse to sell a little bit. Yeah, so we got 3 minutes here, and like I like to say, it's these bigger picture events that have the capacity to change a technical picture very quickly. So right now our technical picture looks great, and there's a good chance that based on this NVDA report in a few minutes now that it'll either further confirm this bull flag and we'll be moving higher, or cause a bull flag failure and we'll be moving lower. Part of me really wants this to be a non-event. That's just me talking me. Part of me really wants this to be like a number where they beat by a little bit, but because of the expectations built into the stock, that we just get a bunch of volatility and then it doesn't actually go anywhere. I think that would be interesting in some ways when there's so much hype around this, but you know, we'll see what happens. It'll potentially confirm the SPYs. It'll potentially confirm these Qs. The Russell, very relatively weak today, losing the ADMA on the daily, pulling back deeper into its equilibrium zone. 206 is a support zone that it did manage to hold intraday, but this Russell's been very scary. And the really interesting part about it was, you know, the TLT pretty much closed on highs today. You know, barely green, but it had a red to green move and pretty much closed on highs. And it barely was impacted by the Fed minutes today. Yet the Fed minutes seemed like they wrecked the IWM. If you just showed me the chart of the IWM at 2 o'clock, I would have been like, wow, the Fed, you know, there was a hawkish message in the minutes that caused interest rates to move higher and really negatively impacted the Russell. But it's not what happened. I mean, this TLT held in really well. The IWM was just very relatively weak for whatever reason. SPYs held in fine, and the Qs were pretty much relatively strong, got back above that 2 p.m. starting point, again showing relative strength, almost as if there was hawkish language that came out at 2 o'clock, but you know, that's not what happened. So got a minute and a half here to the report. You know, from a trading perspective, there were some good trades again today. You just had to pick your spots. You know, we had a really good trade, or at least I did, if anyone took it with me, on FCX off this low here into this bounce. You know, traded some Sun Power this morning. It was really tricky on the degree of the pullback here. It made it really difficult to maintain your stock. But luckily, it gave a big enough of a pop to sell some stock first, and I was able to hold some throughout the move. So Sun Power actually ended up being my second best name of the day. We got a minute here. I bought back into a little bit of Alibaba on the dip. Big pullback from this pretty extreme high back down into equilibrium. So this is where I want to be involved in it. Got a little bit of Reddit, same deal. Got extended, liquidated the position, pulled back. So that's that. It's like a quick overview on my day while we wait for NVIDIA here. So we are waiting on NVIDIA. Should be out in about 30 seconds or so. Get this chart up to be able to see after hours action. All right. Sorry, Brant. Maybe I'll throw it up at the end of the meeting, but by that point, we'll have a better idea. Ten seconds. Just be really careful, anyone that's considering trading this here after hours. It's going to be very dangerous. Initial tick is lower. NVIDIA data center revenue beats, Q1 revenue beats, adjusted gross margin beats, automotive revenue beats, quarterly cash dividend raised. Why is this? I don't see the reason for the opening down tick. Second quarter revenue. I mean, these are pretty healthy beats. There it goes. There it goes. NVIDIA sees second quarter revenue 28 billion plus or minus 2% versus an estimate of 26.8 billion. So seeing beats here across the board. There's no number there that missed. 10-to-1 stock split. Ah, that's awesome. That's awesome. Can make this $100 stock. I'm so here for it. AMD on the rise for me. Still got this position in it. NVDA testing 1,000. What did we say? Was $78 is the move based on the options report? 78, right? Yep. So we are up 40 here. I feel like on those numbers, you know, like I'm saying, if the stock wasn't up so much into the report, that it'd be up a lot more. It just goes to show you what we were talking about. I mean, those numbers are stupendous. Love that gross margin beat. Quarterly cash dividend raised by 150% to 1 cent a share. Yeah, there wasn't much of a dividend there to begin with. I love when the expensive stocks split. I was so pumped when Google and Amazon forever, they were like $3,000 stocks. I would almost never trade them because the spreads were just so wide. It made it so difficult to trade. The slippage you had to deal with, and then when they made them $100 stocks, you know, all of a sudden found myself trading them like every day. So it's pumped. Blackwell platform is in full production. I have no idea what that is. Data center growth was fueled by strong and accelerating demand for generative AI training and inference on Hopper platform. I'll tell you when I so I'm because you guys know I am not a tech guy. Sometimes when I'm reading some of the stuff that these companies do, it's like absolute gibberish to me. Trading is expected to commence on a split-adjusted basis. The market opened on Monday, June 10th. NVIDIA boosting quarterly cash dividend to 10 cents a share from 4 cents a share. Just what the algo wants. All right, so we'll keep an eye on this. Big boost here, you know, up 43 bucks. There's a potential for this thing to run another 30 just based on the options move. So, you know, again, I do think that there was a lot of validity to what we said coming into this report that, you know, a good report's not going to be good enough. It's got to be an excellent report. This is an excellent report, and even on an excellent report, so far it hasn't even been able to do kind of the full measured move implied from the options market. So, you know, there was a lot going on here for NVIDIA. Palantir moving up a little bit on it now. Palantir with a pretty nice uptick there. Path with an uptick. A lot of times on these earnings reports, anything that's kind of AI related, speaking of AI as a stock, getting a little bit of an uptick. Haha, let's go, Will. Now that you made your money, Will, get off the computer and go enjoy your trip. Yeah, good point. Good point. Brant's saying wait for the conference call. He's a great salesman. 100%. Not sure what time. I would assume 5 o'clock. All right, well, that's it for the moment. You know, pay attention to this NVIDIA 950 is important on the downside, kind of where we started from. But it's a great initial move here. AMD up a couple bucks after hours. Things are looking good. And what's our market doing? Let's look at this chart. It's got the after hours action on it. Qs above the day high. SPYs below the day high now. Looks like it ticked above it real quick. IWM trading down. Russell trading down. Oh man, we don't care. We don't care about AI. All right, so we'll monitor this market, but you know, so far so good. Just going back to the daily chart of the SPYs here. Definitely going to help support, at least for the moment, unless something happens. Definitely going to help support the continuation bull thesis that we have right now, especially from the S&P and the NASDAQ. NASDAQ trading at all-time highs after hours here. SPYs, you know, not quite there, but looking real good and real healthy. Trying to think if I have anything else to talk about. I kind of gave my real quick spiel, the short version of my spiel on the market and some of my trading a little bit today in the 10 minutes that we had. So I guess I'll just turn it over to you guys for any questions, comments, whatever that you may have that I might be able to help with. Not seeing anything in the VTF yet. On the YouTube. Kevin G talking about some pain he experienced today buying the Qs at 435.50. What? 435.50? I think you're giving me a wrong price, but at 2:45 p.m. So we can look at 2:45 p.m. It's a good uptick candle there. Just to be stopped out 30 minutes later. So you got stopped out on this downtick move. Did that downtick move break this low? It did. It broke the low of this bar by a couple pennies, but it didn't break the pivot low. And I think that the right stop loss, if you're buying this bounce back trade, is to use the low of the day. And it gave you enough of a move where even if you did get stopped out, whether you're using a tighter stop or using the low of the day, which I think is more appropriate, it gave you a big enough of a move that you should have been able to get your risk covered. And when you're trading a counter trend move post a news event, you know, you really got to make sure that you're getting your risk covered. And then, yeah, you know, a move without you after you got stopped out just kind of is what it is. I think that you set yourself up for really bad psychological habits if you overly look at the shakeouts that happened to you in your trading. It's part of the business. We work in a game of probabilities. No matter what your stop loss is, eventually there will be a time, if you're trading long enough, that it ticks your stop loss to the penny and then has a big move in the direction that you were looking for without you. I mean, it's just part of the business. But if you know, sit around and have, as you mentioned, grown man tears off of that type of shakeout, you're just kind of setting yourself up for some bad psychology going forward where you don't follow your game plans. And since I'm talking about game plans, you know, I had to have a conversation with someone today about just the importance of risk management. Risk management, I really believe, is the key to success in this business. It's more important than your ability to read a chart, more important than your ability to read a tape, more important than your ability to read a balance sheet, more important than your ability to build out a really good fundamental thesis or perspective on the market or on individual stocks. It's your game planning and your risk management. It's your ability to be able to execute that game plan that will, you know, separate you from being successful or not successful. And part of having a game plan with risk management is risking that occasion that you get shaken out of an idea or get shaken out of a trade that works. And you got to be able to very quickly put that behind you, recognize that you work in a game of probabilities, Ask yourself, did I trade it right? Did I have the right stop loss? Did I have the right game plan? Ask yourself that after you get out of the trade, by the way, not when you're in the trade and your emotions are running hot. And if the answer is yes across the board, I put myself in the right position to make money, I had the right sizing, the right stop loss, I did everything right, I got shaken out, I got stopped out, whatever it is, you want to do that over and over and over and over again. You should be happy for that loss. You should accept that loss with a smile because you should know that you're doing the right things, and if you do the right things consistently over time, then you will make money. Seeing your comment, Kevin, that you raised your stop loss to break even, I really I really don't like that as a general rule. I don't like when traders put their stop loss at their entry price. It's a common thing over the years that I've heard people do. The thing about utilizing a stop loss as your entry price is it's subjective to you. I want to utilize stop losses and points, price points that are important to the market and not important to me. Because the market is what's important. I'm not what's important. I'm just a cog in the wheel of someone who is, buying and selling, stock over time. You need to make sure that your stop loss is important based on the market, not based on you. So when you're putting your stop loss at your entry price, that's a relatively arbitrary price. Yeah, sure, you're trying to have good execution, but even if you have good execution, your stop loss does not make your entry price does not make a good stop loss. You want to utilize stops that are important based on the market. So, I mean, this is a perfect example. If you're telling me you bought on the 245 candle somewhere, and you use the right stop loss, which again, in my opinion, is the low of the day, and you need to make sure that you have a good price based on a move up into equilibrium based on the low of the day, then that's it. You're not getting shaken out here because the market never violated the point that's actually important to the market. And hopefully that move is enough where your entry price versus your stop loss at the low is enough to get your risk covered. So if the trade fails, you're in a win-win situation. And then if the trade works, then you're in an even better situation. And then if the trade works and NVIDIA blows out earnings and goes up to $1,100 and the Qs go up to 460, you still have your position on. That's how you put yourself in win-win situations that will make you money in the long run. So just giving you some feedback on the stop loss. Very much not a fan of utilizing your entry price as a stop, but it's something I've seen traders use over the years. Benjamin asking about AMD as a sympathy play to NVIDIA. So I do have an AMD position on. It gave a good initial pop. I see now that it gave a lot of that back. AMD as a secondary to NVIDIA is a little bit tricky because AMD should, on the one hand, go up on a good NVIDIA report because they're in the same business, and if NVIDIA is crushing it, then that means that there's a good chance that AMD is crushing it. There is also a degree of competition, though, where I think at a certain point, right now we know that the pie, the AI pie, is getting bigger, so that means that everybody can make more money. But it could be that NVIDIA is also taking a larger share of a bigger pie, which hits AMD down a little bit just because they're competitors. But so far so good. AMD gave a nice initial $2 pop, now trading back down to this 166 area. I see some questions and comments came into the VTF, but since I'm already on the YouTube, I'll just stick with the YouTube for a minute and then I'll come back to it. Blackwell full production is huge. Info from Gabriel. I got no idea. From James John, what's the news feed you're reading for this NVIDIA earnings report? The virtual trading floor, our team virtual trading floor that we utilize here at T3 for our professional traders. It is free for anyone who is a professional trader, or you can become a paying subscriber to it. I greatly prefer for people not to be paying subscribers to it. I prefer for them to actually be professionals with us. But you know, for sometimes for certain reasons, maybe you're running a hedge fund or something like that, and you can't be a trader with us, and you want to be a subscriber, that's just fine. But James, if you want to learn more information, you can reach out to me, or you can go to the T3 Trading website. But yeah, the VTF is great. I pretty much exclusively use the virtual trading floor for research and for news and option flow and everything else, because we got a few great guys here in the VTF. Patrick, first and foremost, who do a fantastic job sorting that information and getting it out to us. From Benjamin, how do you guide decision making and layers of probability when trading after an earnings report? Cool. So good question. I did not trade this NVDA at all. I really wasn't planning on trading it. Just got a lot of risk exposure right now, and I've got a bunch of names on that I knew were going to move based on NVIDIA, so I didn't want to trade that one directly. But the question is, again, how do you guide your decision making and layers of probability when trading after an earnings report? So I do obviously take in, as we saw just right now, I take in the information on the earnings report as it comes in, what the numbers are. But you got to be a little careful with that. You can't just see a good earnings report and press your buy button. You can't just see a bad earnings report and press your short sell button. While most of the time, if a company reports good earnings, the stock goes up, you will see in every single earnings season stocks that report what seem like to be a really good report, and the stock trades down all day on it, or stocks that posted what seems like a pretty bad report and trade up all day on it. So you can't just blindly buy or blindly sell just because a report on first glance looks good or bad to you. But it doesn't mean that you shouldn't be taking in that information. You should be. Because like I said, most of the time when an earnings report is really good across the board, like this NVIDIA one was, stocks do end up going up, even if it's not a 100% of the time thing. So I'm definitely paying attention to those numbers. I'm roughly eyeballing how big the beats were and if they are across the board. Sometimes, most of the time, I actually end up seeing like a mixed report. They beat on EPS, they missed on revenue, they guided higher, but the margin is lower, or something like that. It could be a little bit more of a mixed report. It could be a little bit more difficult to digest. Generally, as a general rule, the most important numbers are the guidance numbers, but it's definitely a general rule. So that's the first thing I'm doing, is I'm paying attention to that. Sometimes if the report seems really, really good and you're seeing it really early, like we just saw, you have an opportunity to quickly buy some stock, but you got to be very careful because they can change on a dime. I mean, even look how fast this NVIDIA. Dare we forget that NVIDIA downticked to $919 super quick? Huge quick downtick to $919. So I don't know, if you thought you got the numbers super quick and you bought $954, this thing could have been $30 against you in like literally the blink of an eye. So you got to be careful, especially because you have to remember that things like market orders and market order stop losses do not work. Sometimes certain exchanges and ECNs do not work after hours. So really got to know what you're doing from an execution perspective. You got to be able to be fast. But broadly speaking, whenever it's any news event at all, my initial trade, if the risk is appropriate, is to be long or short versus the starting point of the move. So we do that all the time with economic numbers, right? You'll hear me in morning meetings whenever we had a CPI or a jobs number or anything like that was market moving. You'll see me in the morning meeting always noting the starting point, the starting price of the move. So if the number came out at 8:30, where was the market trading at 8:29 and 59 seconds? That's what I want to know. It's the starting point. And then broadly speaking, if you're trading above that, then you're better off being long than short. If you're trading below that, you're better off being short than long. But get the heck out of the way real quick if the move gets negated. So with NVIDIA here, if you were able to capture it quick on the way up from a decent price, that initial stop loss area that I would be looking at would be like this 950, 952 starting point for the stock. If the market's interpreting this as good news and the market's more important than my interpretation, it should not be able to get back below that 950. So that's the first thing I'm looking at. Then eventually you can begin to look at little chart patterns, like you just had this inside 5 and up, tried to break out of this wedge to the upside here for NVIDIA. But a lot of trading after hours on earnings reports is actually tape reading, um, which is funny because I tend to kind of talk down on tape reading in the modern market environment. It was really, really important when I first started trading. I've talked about this in afternoon meetings in the past, and now it is significantly less important. There is just a ton of noise in the tape, and if you're not really good at reading it, or say it is, not only do you have to be really good after hours on an earnings report, because there's less robotic activity. There's definitely robots, but there's less robotic activity. There's a higher percentage of human beings that are actually trading and executing after hours than there are during market hours, as kind of a general rule. And a lot of those robots are going to be risk averse, and right in front of a big earnings report, a big economic number, they'll actually turn off. I don't want to take on event risk here that trying to HFT a short trade at $950.30 to make 10 cents, and the stock is instantly $70 against me. So your tape reading skills, the tape tends to trade much more pure after hours on an earnings report or during like an IPO or generally in a news event than it does almost all the time otherwise. So a lot of the trading that I'll end up doing if I am trading something after hours on an earnings report really is tape based. It's finding those natural buyers and sellers and identifying how they're buying and selling to see if they're lifting their bids and offers and moving to different prices and driving the stock up or down and being able to ride that / get out if it breaks, things like that. So if that helps. I think that was a question from Benjamin in the VTF. Yes, it was. Not in the VTF, in the YouTube. Thanks for that. From Gabriel, do you think tomorrow we can try new longs on a 15 to 30 minute catch up, assuming we get a gap up? Yeah, I like that trade. That I'm assuming you're talking about NVIDIA. You might even be talking about the market itself. But I'm a big fan of that earnings gap up, opening pullback, first test of the ADMA on a 5-minute chart especially, where you get like that downside tail into the ADMA hammer, and then you don't have that extension anymore. That's a trade that I really like on earnings reports. It's not 100% success rate, but it's got a pretty good rate of success. Yeah, the market in general will be the same thing. If we're having a big gap up, it'll be like we talk about most of the time in morning meetings when we have really big gaps, where you just got to be a little bit patient at the direct open just to see how the market handles the upside extension or downside extension that comes from the gap itself. But generally, I like the idea of what you're talking about. After 15 plus minutes through time or price, ADMA catches up in the 5-minute, look for continuation. But we can assess that tomorrow morning. Back over to the YouTube. Bill K is saying that. Tommy Thornton is saying that every point on NVIDIA is $25 billion in market cap. That's a sick number. Sick number. Let me scroll up a little bit and just see if I missed any questions. I'm going to miss some from Robo. Could a stock split make AMD, Micron, or other similar priced AI stocks less reactive to traders? I'm not sure what you mean by less reactive to traders. I don't think that a stock split for NVIDIA will have an impact on the way that AMD or Micron trades, if that's your question, and maybe I'm misunderstanding the question. Shane asking me my game plan for S. So as you know, I've been trading S very consistently since I think March of 23. There's barely been a time that I haven't been in S, except for I think into this earnings report when it died. I had fully liquidated the position. This is when they had that accounting problem, so I had no position going on into that earnings report, and then got back in. And into this area up here, it got a little bit too expensive, and I had liquidated my position on the way up. And then I think somewhere in here on this gap down, which I think was on the last earnings report, is when I reinitiated the position, and I've kind of just been working this range ever since. So, some of the positions that you see that I'm in very consistently for long periods of time like this are positions where I'm involved in that cash flow type of strategy that I've spent time speaking about in afternoon meetings, and I'm up like a boatload of P&L in S. It was one of my best names of the calendar year of 2023, and I'm up in it in the calendar year in 2024. So I'm up a lot in it, and my game plan with this trade is very similar to what I've kind of discussed. Like when I was working with Rich back before GameStop broke out and it was a $15 stock, on just how you can have a core position, kind of continue to work ranges back and forth for cash flow, and then every single time you get filled on something and put more cash in your pocket, you can choose to either, maintain that cash versus your original stop loss, or you can choose, if you want to widen your stop loss to still be willing to give back the position all the way to break even. So that's what I've been doing with S, is I've just been continuing to kind of take the cash that I've been making and just widen my stop loss and widen my stop loss. Where that price is currently, I don't even know. I'd have to look it up on my spreadsheets, but it's so far away from the current price that it's trading at that I don't trade the stock with a stop loss in or anything like that. It'd be somewhere, I don't know, like probably. Now you're making me curious. Let me see if I can just look at this spreadsheet real quick and have an idea. I need to update these numbers a little bit in here, but it looks like from where we're trading now, I can probably afford to buy stock all the way back down in S, and I've been doing it every 25 cents down to like $12 or $13 or something like that. So that's it. I like the company, really big picture. A little bit nervous in the mid to upper 20s that the stock is overvalued at that price. So that's why I, got fully out up there. On the upside, I will be out of this thing. I'll be out of this thing at. Sorry, I got so many positions, so many game plans. This is why I keep spreadsheets. I'll be out of this position somewhere around 25, which makes sense technically, right? You can see 25 from this gap down on that earnings report. There's a little bit of support before then. It was resistance on that earnings report. So $25 has kind of been the upside target for now. And I am more than happy with this thing ranging, and I will let it range forever if it wants to, because every time it was 25 cents, I put some money in my pocket in the meantime. So that's my game plan. Thanks for the question on that one. And SunPower seems like a tough one. Yes, SunPower is my second best name of the day. It was really hard. It was really hard. I bought like pre-market, I think, as we were starting our morning meeting when the headline got posted on Tesla, like that whatever they're doing, a partnership with Tesla or something. I don't even remember what it was. But first the daily chart, always first the daily chart. We know that this was a recent squeeze name along with GameStop, right? So that's the first thing I thought of. I go, it pulled all the way back down to kind of where it started. I'm already looking for I've mentioned it in several meetings in a row. I don't think that the meme stock stuff is done yet. Though that seller in GameStop at 22, I mean, oh my gosh, how much stock does this guy have to sell? It's insane. This thing wants to go, and this seller won't let it go, and there's a chance that it fails eventually because of that. wild how much stock's being sold up there. I'll admit that my idea is wrong if we get like a legitimate close below 20 into that $18 area. But for the moment, I still like the idea of looking for squeeze names in certain stocks. Some of these names fully retraced to where they started from, like the SunPower, gets hit with a news headline. So, you know, that's kind of how it started. I saw that the news got posted. I already know the name. I already know what the daily chart kind of looks like. And I was able to dive into some stock initially at like $3.20, I think, something like that, as kind of an initial buy. I think that this downside tail here is, this initial one at 920 is not real. So, you know, had some stock at like, you know, 320 or so. Stock opens, it initially rips up to 355. And I got a little bit lucky. I was able to dump stock in the like upper 340s. I think I sold some stock at $3.49 actually. So that helped me a lot. And you know, I was kind of giving it down. This goes back to Benjamin's question in the YouTube. You know, the starting point of the move where you know that it gets negated if the news is wrong is $2.74. So some of it I was trying to keep a little bit tighter than that. There was this inside 5 and up here with a high of $3.10. So I did reduce some stock, but some of it I was giving a little bit more space to, and you know, just taking off the after hours charting now because it just makes the chart look sloppy. So you can see that initial uptick, and it was hard because the degree of the pullback. I mean, this thing pulled back to $2.78. I said the pre-market low, the start move was $2.74. It overshot the 80 EMA, it tailed into the 21 EMA, it almost fully filled the gap, it almost fully negated the starting point. I think it was just a bunch of volatility there. I actually took a big stand and bought a boatload of stock at $2.80 and $2.81 on that move. Yeah, you can see it on my other chart of my executions, and I dumped that stock though real quick. I took all that extra stock and I dumped all of it by $2.97, and then I was reduced back to like a fairly normal-ish position size, which I kind of worked for the remainder of the day. But I got a lot of long exposure on right now. I really don't want to be adding new swings. Baba and Reddit are one thing because again, that's me just buying back stock on a dip in trades that are already profitable for me. I didn't really want to add another. You know, I got some GameStop exposure right now, which is definitely a company that I don't believe in, but like I keep saying, I think that there still is some potential on this meme move, so I've been trying to stick with that trade, and I've been trading it okay intraday, but I don't really want to add like a new one of these onto my swing list. So I was keeping it tight. It wasn't closing super well, and towards the close, I just sold the whole remainder of the core position that I still had. And it's my second best name of the day, but it wasn't easy. I got a little lucky with this fill at 249. I got a little lucky, honestly, by buying like a lot of stock at $2.80 and $2.81, and you know, being able to dump that for. I sold stock for 5 cents profit, 10 cents profit, and 15 cents profit, basically on that heavier buy. So that was that one. From Jeffrey asking me a question on NVDA that looks like it might have been a little bit time sensitive. So sorry I missed that. Would you buy NVDA on this? Would you buy NVDA on this small AMC pullback? Small AMC pullback? Not sure what you fully mean by that. Not sure if you meant to write AMD. Still wouldn't fully understand what you mean. Oh, aftermarket close pullback. Is that what you mean? Ugh, look at this. Look at this false print, ruining my chart. Let's see if I do this. If it changes it. Oh, it's so annoying. That's so annoying. You asked me that at 434. Yeah, that was that pullback here that then gave the inside 5 and up. You could have bought that pullback if you were willing to take $10 of risk in it and you believed in the report. I don't hate that. Oh, there we go. I fixed it. Thank gosh. You know, if you wanted to buy this dip back to the after hours 80 MA on the 5 minute, buy somewhere in the 960s and give it all the way down to 950 because it just gave a good technical pullback and the report's great. I don't mind that. Probably the better trade was the inside 5 and up that happened where you're buying stock much higher, but you're buying it on the way up on a good technical pattern. So I think you could have bought that pullback, but you'd have to give it some space, or you could have bought it on the way up, either versus that low or on the inside 5 and up when it materialized. Excellent question, Jeffrey. Yeah, what's that AMD doing now? Yeah, working its way back up. Yeah, definitely some resistance intraday at that 160.50 that it rejected off of. AMD used to use NVDA closely. Used to follow NVIDIA closely, but it's developed its own character since that March high. Yeah, for sure. You can definitely tell if we analyze the daily chart. AMD's been relatively weak compared to NVIDIA on the daily chart. Question on faster order entries on fast-moving stocks. For example, when there is a pop at the open and you're trying to catch a bid on the way up, are you adjusting your bid orders with the right arrow key to increase your entry to outrun the stock to bid in front of it? I hope that makes sense. Sort of makes sense. When you're trading things for momentum early, you either kind of need to know that you're paying up. If you're trying to bid in and provide liquidity, you kind of need to know that you're paying up on price a little bit in order to be able to get filled. Or you need to just take stock, take liquidity to enter. I'll fairly often do a combination of both. I'll take the offer. I got some stock. Maybe it's not everything that I want, so I'll go, kind of inside bid or to a bidding price that I'm willing to take that stock to be able to get more. If I do that, then I usually will not be willing to increase that bid price because I already have a position. If they want to fill that bid price, I'm happy with that price. That's why the bid's there. But I'm not going to chase that bid higher trying to get more stock. I could have just taken the offer more or something like that, and I already have some. I definitely, every once in a while, hurt myself by being a little bit cheap on bids and offers, and sometimes I don't get stock on things that move. So that's worth noting. I do generally prefer to provide liquidity whenever I can. I don't like paying spreads. I prefer to get rebated on my volume instead of paying the exchanges. So it's a preference. I definitely try to bid in, and I find that it helps my P&L overall, even if occasionally I miss a trade. I've also found that sometimes, and maybe this is some of you guys here, sometimes we'll have the pleasure of getting one of these old school guys who have been trading for longer than me to join the team. You know who you are. If you used to trade on the floor or something like that. I have found that those guys, and it's probably because of how markets used to trade and how they've changed over time, especially if you kind of grew up when the market was still trading in fractions. Those guys really exclusively take liquidity because it's what they were kind of taught to do, and it was the right thing to do back in that market environment. I have found that if I can get those types of traders to adjust the way they execute to provide more liquidity and take less, that it actually usually has a big boost on their P&L. So, I don't know what you mean with the right. So the right arrow key, left arrow key won't change my bid or offer price. When I've got the bid already in, I don't know, let's go to Siri again. If I put 1,000 share bid, actually, hold on, I'm gonna use. That's not gonna work for me right now. I can't use that example. But anyway, I'll just tell you, if I've got 1,000 share bid in somewhere and I want to raise that bid or offer or lower that bid or offer, I use a page up, page down hotkey that raises that bidder offer in penny increments. So I'll do that a little bit here or there to get a fill. You can't overuse that key though, because every time you utilize that key, you're canceling an order to place another order. So if you like want to bring your stock bid up by 25 cents and press page up 25 times, you just canceled 25 orders. And at a certain point, there's FINRA regulations where they don't want to see very, very high cancellation rates on orders. So it can look like market manipulation or whatever. So if you want to raise or lower your bidder offer by a penny or two, that's going to be fine. But if you want to do it by a lot more than that, then you need to actually cancel the order and then change the bid price. But that's usually what I'm doing. I'm usually taking some stock as an initial entry, and then I am maybe bidding in for more at the price that I'm willing to pay. Hope that helps. You have a bid order hotkey, and then my left, right, raise or lower the amount before hitting enter for the order to go through. Oh, well, yeah, I mean, I've got that. I've got that too. I thought you meant after it's already in. But if I'm coming in with the bid price at 79 cents, and that's the price that I'm trying to get because it's the inside bid, I'm instantly placing the bid out at that price, like instantly. It's not like I've got my bid order key up here, and then I'm seeing the stock move, so I'm like raising where I'm potentially putting that bid because the stock is moving. It's too slow. I got, I'm just taking the offer and then getting my bids in at the prices that I want. Hope that helps. Tate saying thoughts on buying day twos. Is that just a general question? As a general rule, and it's definitely a general rule, I don't like buying day twos or day threes. I don't like chasing price. I find that you have a worse risk reward and lower probability of success. I ideally like to be in the catalyst that leads to the day one, and that will give you the best risk reward. It's not always possible. Sometimes you got to pay up a little bit. So measure your extension. How big was that first move? Where's the stock coming from? And maybe you can chase a little bit on a day two. But as a general rule, I don't like to do it. Varun asking about Moderna. Oh man, on fire today. Was this because of the bird flu from the person in Michigan? Or was it something else? I really don't know. But sick breakout in Moderna today. Great volume. Stock looks fantastic. A great example of something that I would not want to buy tomorrow if I wasn't already in it. Too extended. I missed the move. I'm not in for the breakout. Beautiful bull flag breakout here through 125. Could have been on your radar. Easily could be in from 125 bucks if it was on your radar. And this is the reward maximization that we like to build out for in our game plans, because you never know when you're buying that breakout at 125 if this is going to be the one that gives you that move to 170 or 225, or if it's going to be the one that fails and stops you out. So looks fantastic if you're in it, but not chasing price at 170 if you're not. Can Pat explain where the page up down function can be enabled? Yeah, just email Pat. I'm sure he's got that somewhere. Moving too slow, too much, thinking too much. Yeah, thinking too much. There's a healthy balance between being able to react quickly and having a good thought process, because you kind of need to be able to have both, which is why you want to internalize the thought process as much as possible. You just want to have it like those layers of probability built into your soul, so you don't have to think about it. It's just, hey, everything's lining up. I already know it. I've worked so hard. I've journaled so hard. I've studied so hard that I know that this is all here that I need to see. Bam, I'm in. Or bam, it's not right, so I'm not. And that's it. So you kind of need to have a healthy balance between being able to be fast, get good prices, being able to react, versus the thinking, which is important because you don't want to just be willy-nilly buying things and selling things that aren't setting up properly for you to be successful and make money. So appreciate the commentary there, David. Back over to the YouTube from James. Should you cover risk all the time at, or buy and hold full position? I'm a big believer in getting your risk covered on most trades that you take relatively quickly. Not all, depends a little bit on the game plan that you're putting on. It depends a little bit on the rating of the trade. You might want to make an exception for a real A+ trade and be a little bit more greedy and sell smaller percentages of stock at larger risk-reward moves. But generally, if you keep in mind the principle that most really good traders actually have a negative success rate, not negative, but less than 50%. Most good traders, not all, but most good traders are wrong more often than they're right. They lose on more than 50% of their positions. I know that I do for most of my discretionary strategies and trades. If you keep that in mind, then the idea of getting risk covered quickly is just a really great concept, because your goal is to put yourself in a position where, yeah, most trades that I'm taking are going to lose money. Sorry, not lose money. Most trades that I'm taking are not going to work. But if on a large percentage of those trades that don't work, I lose nothing or even make money in them, and then a smaller percentage of trades are like Moderna here, and I bought the Moderna 125 breakout, you're making money, And I like to emphasize sometimes, we talked about it a little bit before with risk management and game planning when I kind of went on that tangent. I like to emphasize at the end of the day, successful trading is just a math game. And it's more important than the approach, strategies, products, anything. At the end of the day, it's a math game. Are you putting yourself in the position via game plans, via consistency? Are you putting yourself in the position where the numbers make sense that you are going to be able to make money in the long run? That's what it comes down to. You show me a trader whose bad day he loses $4,000 and good day he makes $1,000. I'll show you a trader who's not going to make money in the long run. It just, at the end of the day, it just simply comes down to the math, almost more important than anything. You show me a trader who is, mediocre reading technicals, mediocre at reading tape, mediocre at understanding fundamentals, but has a really good grasp on the math, on not being afraid to get stopped out, knowing how he can make money or she can make money when the ideas are working and have the math work. You show me that mediocre trader versus the technical analyst, expert, CMT designation, not to be hating on that designation by any means, but knows everything about charting and everything else, but just doesn't have consistency with game plans, doesn't want to stop out of trades that aren't working because he or she over believes in the idea. The math doesn't work. I don't care how good you are at reading technicals. I don't care how good you are at whatever. You can look at a chart and tell me it's going up or down all the time and almost always be right. That trader's not going to be as successful as the mediocre trader who has a really solid grasp on the math. So, work on your technicals. Eventually, if you want to learn to read a little bit of tape, fine. It's not going to hurt. Learn about how companies move and earnings growth and everything else. Learn about options flow and its effect on the market. Learn about gamma and CTAs and all the stuff that we talk about. Learn about all that. It's going to help your trading. But the thing that you should spend more time on than anything, especially if you're newer in the business, is the math. I like to talk about once in a while. I haven't mentioned it in a little while, so I'll mention it now. back in the day when I was fighting professionally, Friday was my big sparring night. Um, Friday was my big sparring night. Even if I was in training camp or not in training camp, Friday was always the big sparring night. I sparred every Friday from 2007, basically all the way through COVID. I probably missed 5 Fridays over that period of time because I was on vacation or something. Um, and one of my favorite things to do after I would finish up sparring is I'd go back home. It'd be later in the evening. I'd have that good endorphin vibe going on from all the exercise I just got. I would turn the computer on. I would open up a blank spreadsheet and I would just play with the numbers of game plans. Forget about, charts for a second or anything else. If I buy at this price and I stop out at this price, what is the dollar risk? What are the different types of game plans that I can implement in all these different situations and scenarios? Or, taking arbitrary trade types of a bull flag or a breakout or, a hammer candlestick or whatever. What are the game plans that I can build around that? And just playing with the numbers and playing with game planning. And if you can get the numbers to work and then be disciplined, that's like the hardest part. Fine. You work really hard, you develop your strategies, you do all this stuff, you develop your game plans, you learn as much as you can. You have on paper, the game plan that can make you consistently profitable. Then go and execute it. Have the discipline to execute it. A lot of ways, it's the hardest part about it. Have the discipline to actually be able to execute it consistently over time. Don't get in your head on, I'm smarter than the market. I don't want to get stopped out here. It could be a shakeout. Blah blah blah. Some of the stuff that we even spoke about today. That's like the hardest part in a lot of ways. And for most people, sometimes myself included, it's that discipline on that stop loss. We work so hard to come up with these trade ideas. You believe in the idea. Forget about the fact that you don't want to take the loss for a second, and you don't want to lose money. You developed an idea, and inherently, if you're a person who has any ego or self-confidence at all, which you have to have, then you believe in your line of thought, and it just can become really difficult sometimes to stop yourself out. And what we got to remember, and it's always so hard in the moment, really, it's so hard in the moment. Every trade, every loss feels like it's the end of the world in the moment. It's only going to be the end of the world if you make it the end of the world. And the only reason that you're making it the end of the world is because you didn't stop yourself out per your game plan to begin with, and then the loss is blowing your account up. At the end of the day, if you consistently take good trades with reasonable risk and stop yourself out on all of them that don't work, you won't even remember that trade anymore in a month. You won't even remember it. It felt like the world to you in the moment. You didn't want to get stopped out. You won't remember it in a month unless you gave yourself a reason to really remember it because you were undisciplined, didn't get stopped out, and then when you're reviewing your trading and your P&L at the end of the month from that entire month, you go, ooh, wow, look at that massive outlier loss. I remember that. But you wouldn't remember it if you actually followed your game plan and your discipline to begin with. So it's really just the most important thing. NVIDIA new highs. Love it. So on that moment, NVIDIA new highs, I will, through $1,000. I'll end the afternoon meeting. I'm sure Jensen Huang's got some great fashion going on. I'm missing it. Have a great night, everybody. See you tomorrow.